I'm indifferent about the dollar. It's you look at the versus the Dixie, which is mostly Europe. You look at the trade weighted broad dollar. It's basically in the middle of the range it's been in for the last 5 years. And as Anna mentioned, there's a good reason, I guess, for it to pull back a little bit. But the key thing to remember about the dollar against a broad measure of currencies, it only goes down after it goes up a lot. And it went up a lot into the massive Federal Reserve and fiscal stimulus and monetary stimulus we had into that peak in 2021. Now it's coming back. I don't know how much lower it goes, but in terms of, I do enjoy when people equate it directly to Bitcoin. It's a small factor. And I think the actual price of Bitcoin now in the gold and copper, it's a much more significant factor, much more established commodities that are basically the inversion of the dollar.
On July 26th, the consensus among 106 economists surveyed by Reuters suggests that the U.S. Federal Reserve will implement a 25 basis points increase in its benchmark overnight interest rate, moving it to the 5.25 to 5.5 range. This shift is expected to mark the latest adjustment in the ongoing tightening cycle. Despite a robust economy and historically low unemployment, the past year of the Federal Reserve's aggressive rate hikes has continued to defy predictions and expectations from analysts and investors. Inflation trends have shown a decline, as indicated by the Consumer Price Index slowing to 3% in June from 4% in May. This has led many in the Wall Street community to speculate that inflation might be more manageable, even sparking renewed considerations of potential rate cuts by the close of 2023. Present deliberations center around whether further rate increases are necessary to sustain disinflation, or if doing so could bring unwarranted harm to the economy. For insights into this matter, let's turn to Mike McGlone, who will share his perspectives on rate hikes, inflation, and other critical economic signals.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Market expectations. You look at the WIRP function on the Bloomberg terminal, it says 92% that they're going to raise another hike on July 26th, and they're going to keep raising, and we're not going to get a cut until March. Now, this is what a lot of economists think, but it doesn't matter so much when the market's already priced for it. So I look at it, it's still simply a fact is the market, the Fed is still taking away liquidity, and most risk assets are expensive, completely expecting this soft landing, and the whole narrative is termed that, oh, we're not going to get a recession, the Fed's still tight and everything's okay. I look at this as one of the most offside markets in history, and the risk reward is just not good. And so if my scenario kicks in, which I still think it's going to, with we'll let Anna comment on this, you get the normal reciprocity from all this tightening, and it shows up in the economy, but in a delayed reaction. Bitcoin should want to be the first ones to show it. So right now, the Fed is still going to keep tightening. And what's going to keep them tightening if the stock market keeps going up? It's still that same issue, which is a problem. And I look over at Bitcoin is, yes, I'd love to be bullish Bitcoin, but if you look at that price right now at 30,000, the first time it traded 30,000 was right at the end of 2020, right at the beginning of 2021. And if you look, so it's unchanged. You look at the NASDAQ over the same period, it's up 20%, yet the volatility in NASDAQ is half that of Bitcoin. So right now, yeah, Bitcoin's great. It's got all this ETF coming on. We have the hopium for the ETF. But if the actual performance versus the NASDAQ, which has got AI and everything going for it, I look at it as I'm disappointed. And I think it's still the problem is I sense so much bullishness. But yet the macro is very unfavorable. The Fed is still taking away the punch bowl. Because I had to bring up some charts and things I've been focusing on for a while. And that's, first of all, let's start with U.S. new homes under construction. It's the highest ever. I go back to 1969 on this one. And the chart looks just like it did in 2006-07. It double topped and then collapsed. The big difference was back then as the Fed started easing in September 2007. Big difference. And also we have this massive spike in interest rates. Yes, we're freezing up the sell side for people who do not want to sell their home and refinance at a higher rate. But since when is seizing up a market good for it? And another chart it made me bring up is we just look at producer price index is the year over year measure. It's at minus 3%. It's only happened 3 times in history since 1949. This is the finished goods measure. And it's never happened with the Fed funds rate still rising at, I'm just using a 3-month bill at 5.28% at the moment. This has never happened before. And I look at it as, okay, maybe the whole rules of all the lessons of economics and liquidity and cycles are no longer accurate. which is what I've been doing on my vacation. I've been really enjoying reading and relearning all this financial history stuff I forget on a daily basis. Those are accidents just waiting to happen. Now, PPI at minus 3% is probably bottoming soon. But the fact that the Fed is still tightening the environment, now we see China, every single piece of data out of China is disappointment. That's a train wreck just getting started. So I look at this is the macro. I'm an impatient person, and the market's testing my impatience. But these things take a while. Let's look at the facts. They started dropping the required reserve rate about a decade ago. It's been dropping ever since. They've been pumping liquidity forever. Now we have a housing crisis that's kicking in and unemployment. And on a nose, we hear from my colleagues who are based there, they have to be careful because this is the situation now is you can't put your name into an article on China if you don't want to risk imprisonment. And that's just the way that's the fact. So we're at that stage now. It looks to me, China to me is a combination of peak Japan and peak Soviet Union about 3 decades ago. It's all tilting that way. Quick question I ask is, what changes this current trajectory of disappointment? They have to stimulate, yet they know they can't stimulate much anymore. Locals, I hear the local entities are so over indebted, they have issues. And of course, the housing crisis looks like it's just getting started.
McGlone also provides insights in the realm of the crypto sphere, expressing his enduring optimism for Bitcoin in the long run. However, he maintains a cautious stance, emphasizing that it is presently premature to make precise price projections due to the plethora of uncertainties prevailing within the market. In addition, McGlone delves into discussions concerning the Hong Kong crypto dollar and offers a broader perspective on the stock market, bonds, and equities. Now, let's rejoin the video and listen to his comprehensive analysis.
Everybody said, I think we can all put together. I definitely agree with Dave about the optionality of Bitcoin and digital gold. And remember, I made the call for 100,000 Bitcoin when it was trading below 20, and we got that in Ethereum. And then, of course, what happened with China. And I still stick with that in the long term, but I think it's more likely to drop 50% and get down to 20, even make a new low before it goes on that trajectory, particularly when I see things like, well, I can get 5.25 in a T-bill, done. I look at the Case-Shiller index, the housing index, it just was almost at the highest ever right before, like 2006, up 20%. Now it's down 1%. That's collapsing. I look at the Fed still tightening. And the last thing that always usually falls is the stock market. Just look at your history. I remember 2006 and 7 was tough, just like Big Short. I was short a lot of stuff, and I didn't get paid back until 2008. It's just the way it works, and people get stopped up. But there's two things. One thing I want to mention is what's happening with Case-Shiller. Bitcoin, I completely agree, but it has major competition like gold does from the U.S., the base currency, giving you the best rate on the planet and the deepest treasury market. But there's one thing I also want to mention I really enjoyed recently to point out how significant this technology is. We're hearing about Hong Kong maybe lightening up a little bit of their strict regulations, and I heard they might approve a Hong Kong crypto dollar. The Hong Kong dollar is pegged to the US dollar, which means that's a quasi crypto dollar.
Dollar stablecoin. So is the Chinese yuan, right?
But
so is the digital yuan.
Exactly. It shows how significant this technology has adapted to the US system, to the dollar, organically. And it's for the US not to mess it up. And I think the updated Lummis Gillibrand bill is going to show that they're not going to mess it up. But it just shows that you can't overweight them. So I just double checked. I always love to check the volume. I show this to everyone. If you check on coinmarketcap.com and click on volume, Tether is always number one. You love it or hate it, but I've seen that since 2018 in Hong Kong. They pointed it out to me. You will see the stock market drop 50% and stay down and not make a high for 10, 20 years. It always happens, and always happens after the biggest pumps in liquidity, which we've had. It could take a new high, but I love hearing traders have traded for 10 years. I've been trading for 10 years. Like, you need to trade for 30 years. And this is Dave. I knew Dave would laugh because we've seen this before. And I've seen it. It's the narrative I've seen. It's usually the psychology. When you hear people, when people tell you, oh, well, when you just express something rational and optimistic about how markets work, and they say things like, well, feel great being poor. And then you look at yourself. I remember hearing that in the 80s, in 87. I remember hearing it in 2000. I remember hearing 2006. And the key thing I'm really worried about now, and with this, is there's so much bullishness, even from Larry Fink, who has a vested interest in pushing a product to track Bitcoin right now, that I have to push back and say, good luck with that one. T-bills look great. And yes, we've seen this before.
The notion of prolonged elevated interest rates is gaining traction, as revealed by recent surveys. In a span from July 13th to 18th, the percentage of respondents anticipating at least one rate cut by March next year dropped significantly from 78% to 55%. Despite a softer consumer price index reading, an interest rate hike in July remains in the cards. However, relying solely on the current softness in inflation for policy decisions might be imprudent, cautioned Jan Navrutsi of NatWest Markets, as economists and financial traders continue to slightly diverge from the Federal Reserve's stance. The Federal Reserve's latest projections, represented by the dot plot, suggest the benchmark overnight interest rate could peak between 5.5% and 5.75%. Yet, only 19 out of 106 polled economists foresee it reaching that range. This perception of the Federal Reserve nearing the end of its rate hiking cycle has caused the dollar to weaken against major currencies, potentially sustaining elevated price pressures. Nonetheless, despite positive indicators, concerns linger regarding the pace of inflation reduction. In this context, a slim majority of economists highlight wage inflation as the most stubborn component of core inflation. Additionally, a notable portion of respondents anticipates a U.S. recession within the next year, with 85% projecting it to commence sometime in 2023. Despite this uncertainty, the economy is forecasted to expand by 1.5% this year, up from the earlier projection of 1.2%, before slowing to 0.7% next year. Your insights on the year's end economic landscape are welcome in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.